Good afternoon, friends. This is Deepak, and once again with us is Sanjiv Gupta, CPA. So, Sanjiv ji, welcome to your own show. It has been a couple of weeks since the last time we spoke, and a lot has changed. Obviously, President Biden had at last passed the bill to help us get some relief. So I wanted to kind of get an update from you as to what some of those benefits look like. I also want to talk to you about the tax deadline. That's an important one right now. Obviously, we were thinking that we'll be all done with taxes next month, but obviously that's not the case anymore. That has been extended. Last time you mentioned there were some inclarity, some issues with S corp and other corporations in filing their taxes. I wonder if there's any clarity in regards to that, and I would also like to know about if there's any kind of updates on PPP loans. So those are some of the questions I've been collecting since the last time we spoke. So I hope there are more updates than that.
Well, every day, by the way, every day is a update. Something or the other comes up, whether it's the government that does it, whether it's Federal Reserve does it, whether it's the Treasury Secretary Janet Yellen says, or SBA or IRS. So every day something or the other comes up. Every day is a day we learn new things. So, like you rightly said, a lot of changes are there. We have to go one by one. For the first thing is very important thing is the date that got extended from April 15th to May 17th. Now it's only a month extension, but what is extended? The date for whom it is extended. The date that is extended is only for 1040 individual tax filers. It's not extended for S corporation. This is not extended for LLCs. It is not extended for C corporation. For C corporation, the date is April 15. Still remains April 15. So if you have a company that is C corporation, you have to file by April 15 or file extension. If you have S corporation or you have an LLC, the date was March 15, not May 17, which has not been extended. So you must have filed the extension. If you not filed the extension, then you're subject to penalties for not filing the extension. What about California taxes? What about California state? For is it complying with the extension? Yes, it's complying with the extension. That's a good thing. California has come out. So it has confirmed to the IRS guidelines, the extension deadlines. So for IRS tax, the California tax return also got extended to May 17, but not for California C Corporation, not for California S Corporation, not for California LLCs. What about the estimated tax payment that is due for 2021 for individual tax filers? So as you recall, we have to pay four estimated tax payment for each year. The date were April 15, July 15, April 15, June 15, September 15, and January 15 of next year. What about the April 15 first estimated tax payment? Is it extended to May 17 as was done last time? If you recall, last year the date was extended from April 15 to July 15. Even the first installment estimated tax payment and the second installment estimated tax payment was extended to July 15. Was is the same thing like this year? No. The answer is no. The estimated tax payment date still remains April 15. So if you are planning to make money in this year, 2021, and you want to pay estimate taxes, so that date is still April 15 to avoid any penalties, not May 17. So those important dates are important, are things that one has to take into consideration for doing their tax filings and estimated tax payments. Now, coming to the second part, the changes relating to the the tax rules changes. Uh, President Biden did sign that American Rescue Plan. I think it was in the month of March 15th or second or third week. So now that has impacted, some provisions are impacting the 2021. Major provisions are impacted 21 and 2022. So what are the provisions that impacts the tax year 2020? So first thing is unemployment compensation. If you are as married, if you're individual, if you're married filing joint and your AGI is less than $150,000, AGI is the total gross income coming from all sources. If that income from all sources is less than $150,000, If you receive unemployment compensation last year, 2020, up to $10,200 of that compensation, you will not be paying any taxes. It's tax free. But your AGI should be less than 150,000. What happens if your AGI exceed 150,000? Everything is taxable. So that is important. Now, what happens to those people who have filed the return, already filed a return with that amount of compensation? They have received last year. They have received 30,000 to 45,000 unemployment compensation from federal and the state. What happens to them? Do they have to file amendment? IRS is providing guidelines that don't file amendment, don't rush to file amendments, just hold on. They are going to provide worksheets for them calculating those things. But my advice will be don't wait for IRS. Just go ahead and file amendments. What about the people who have not filed so far and they have those unemployment compensation? Is the software ready or IRS ready for those? Yes, the software are getting ready to exclude that $10,200 as tax-free income. Now, the tax-free income is there. Uh, that is included in the computation of total income, but whether that will be included or not, still IRS is we are waiting for guidelines from IRS on that one. So that's important thing relating to unemployment compensation. That is for 2020 tax year. What about California? Conforming to IRS rules about this $10,200. Well, California does not tax any employment compensation. So there's no question on California side. So that's the first change that happened with the American Rescue Plan. The second change with the American Rescue Plan was another stimulus payment, the third stimulus payment. The first one was $1,200 merit filing joint. Second was $2,400. The first one is 2,400. Second was 1,200. This one is 1,400 per individual, 2,800 for merit filing joint. Now this one, economic stimulus, third one is 1,400 per individual, means $2,800 for merit filing joint. Adult dependent also qualify. In earlier two stimulus payment, the adult dependent did not qualify if they were age more than 17. Here, they qualify for the same amount. There, if they're under 17, they qualify for lesser amount. Like in the first one was 600, second one was 500. Here is 1,400, even if they are above age 17. So that's a big step. Now, again, there's a AGI limitation in this case also. What is the AGI limitation? The merit filing joint, they can go up to their AGI cannot exceed more than $160,000. So there's a small gap, 150 to 160 for total phase out. In earlier cases, first round and second round, it was bigger gap. It was 50,000 up to 200K you can go out. But here is only 10,000 gap. What about single person is 75,000 and gap is only 5,000 up to maximum $80,000. So that's a stimulus payment. People are getting stimulus payment. This IRS has just came out and said they are going to start the second round starting Wednesday, starting today. So if you have not received any checks, you can go to IRS website and find out where is my refund or where is my stimulus payment. Get my EIP. If you still do not receive it, don't worry. That amount is for 2020 tax year, not 2020, 2020 tax, 2021 tax year. So when you file the return for 2021, you will get that rebate if you've not received it. This third one is for 2021 tax year. The earlier two one were for 2020 tax filing year. So that's the important difference that is there. 2021 and 2022, 2020 and 2021. Now, people do ask me this question: if I'm that, if my income is tax year 2020 is much higher than 2019, what will happen then? So I will suggest to them is hold on to filing their 2020 tax year return because the income is higher than 2019. Because this stimulus, third stimulus, will be based on 2019. If 2020 is not filed, if you are having higher income in 2020, hold on, file after getting the refund, or because it's based on 2019. If your income in 2019 was higher than the year 2020, then go ahead and file it so that you can claim that refund, that stimulus payment, not refund, the stimulus payment of this one. So these are the second important change of American Rescue Plan. The third important, very important change of American Rescue Plan was the child tax credit. So we know the child tax credit is allowed up to $3,000, for $2,000, 1,400 refundable, 600 non-refundable, up to AGI of 400K if you're married filing joint. They've increased from 2,000 to $3,000 child tax credit, and they've provided additional increase of 1,600, means from 2,000 to $3,600 if the age of the kid is less than 6 years. If the age of the kid is under 17, they've extended by 1 year, 18. In this American Rescue Plan, they have increased from 2,000 to $3,000. So they have increased the credit from 2,000 to 3,000 generally, from 2,000 to 3,600 if the age of the kid is less than 6. Now, again, the AGI limitation applies. This extra $1,000 to $1,600 will go out if your AGI exceed $150,000. But they still get $2,000 up to AGI 400K. If you make more than $400,000, then you're not getting any credit, child tax credit anyway. That's a third change of American Rescue Plan. The fourth change of the American Rescue Plan was a premium tax credit, not paying the premium tax credit penalty that you pay. So if you're taking Obamacare and when you take the Obamacare, when you take this insurance from marketplace based on your estimated income, and when you file the return, the estimated income is much higher than what you've applied for and got the premium credit. Now you have to pay that because your income is higher. This American Rescue Plan has provided exclusion that you don't have to pay it back for 2020 tax year. And they have expanded the federal poverty level for tax year 21 and tax year 2022. So it's a welcome relief for a lot of people. We have to really wait into the guidelines for this more as the IRS comes out with more clarity. Right now, they are more focused on stimulus payments, getting the stimulus payment out, and then they are now focused on unemployment compensation. This is the third piece they will focus on, how to get this premium tax credit expanded for 2021 and 2022. The fifth one changes American Rescue Plan was a child and dependent care increase in the limits, child and dependent care credit. Earlier, the credit was 35%. It has increased to 50%. Amount has also increased. Earlier, it was $3,000. They increased it to $8,000. And if it's more than one kid, it was earlier was 6,000. They've increased it to $16,000. And the credit was increased from 25 to 50%. But again, the AGI plays an important role, as everyone knows. They've increased the AGI phase out from 25,000 to 125,000. But AGI phase out do work out. Is still the limit are still applicable. You can get the maximum 20% as you did last year, last every year, based on your income levels higher than, I will say, $250,000. So people who are making less income, people who are making $150,000 or less, they really have a lot of credits and a lot of payments that they can receive, but they need to plan out. Planning is becoming so important, so critical. Even if you're making so much income, but if you do plans in such a way that can reduce your taxable income, AGI below that limit, that will help you a lot. So planning is, one has to really look into the planning for this year. Then the sixth one is 5 year. They have provided a 5 year COD exclusion for student loan debt forgiveness starting from 21 to 25. So if there is a student loan payment and there's a cancellation of that for those in those 5 years, there's no taxability of that income. So there's a 5 year window. Again, we are waiting for guidelines from IRS. They are not focused, like I said earlier. So they are more focused on other things, but that's the thing. So those are the individual tax provisions that have changed with American Rescue Plan. There are other provisions, but these are the more important critical provisions. Another provision that just came to my mind was Cobra extension payments. So if you are laid off from the job last year and you're taking Cobra payment is available for 18 months. So this 6 month from April 1st to September 31st, if you make any of those payments, you will be reimbursed In what way it will be reimbursed, whether it's tax credit or check can be go out, we have to see, we have to wait. And what will be the AGI limitations? Again, we have to wait for those details coming in. What about the business tax provisions? So employee retention credit, we call it ERC, is a very important provision that has been extended with this American Rescue Plan. We know that for tax year 2021, ERC was available for 2 quarters. They have extended to the next 2 quarters. So for year 2021, if you're experiencing is a decline of more than 20% in the revenue in any one quarter of 2020 compared with any quarter of 2019, or in any one quarter of 2021 compared with any one quarter of 2019, more than 20%, then you can claim a ERC credit per employee $10,000 per quarter. So they are extended for 4 quarters. So per employee, $40,000 credit you can claim if your revenue is dropping by 20% or more in any one quarter. So it's a very welcome relief. So even if you didn't, don't get, don't become qualified for second PPP loan, because second PPP loan asks for 25% or more reduction. This asks for 20% or more reduction. You can qualify for this ERC. It's a much better because it's a payroll tax credit, and it can be advanced refund also for you. And one important provision also there for American Rescue Plan is for restaurant revitalization grant. For those restaurants netting sales less than grossing sales less than $500,000, they can give the rest. The act gave the power to SBA to give to give them grant based on the losses, based on the reduction in the revenue compared with the 2019 compared with 2020 gross sales amount. Again, we are waiting for details from SBA. SBA has not yet come out. Like I said earlier, uh, too many things happens every time something or the other changes. SBA is right now focused on PPP loan forgiveness, PPP loan second round, first draw or the second round. The last date for applying for PPP second draw or first draw for the second round is March 31st. Now, a bill has been passed in the House for extending for extending for 2 more months. That bill is on the table of Senate. I hope, I think it will be passed. It will give additional 2 months, 2 more months. By the way, the PPP second round is not yet, it's not yet funded. It's not yet like not yet completed. Means there are still funds available. So about, I think about 60-70% are used up. So hopefully this will be extended for by 2 more months and people will get it. American Rescue Plan has provided a $7.8 billion extra amount for PPP loan forgiveness. PPP loan, I keep saying forgiveness. PPP loan second round uh, for non-profit and other activities. So of course, you still, if you are looking for PPP loan second round, second draw or first draw, this is the time to look at it. Apply for this PPP loan. It's important money. It's a tax-free money. Expenses can be double dipped, means you can claim the expenses against loan forgiveness, as well as you can use the same expenses at deduction on your tax returns. Now, what about California? We're still waiting for California for PPP loan forgiven expenses deduction for California tax returns. The reason why California is slowing down, it's not yet come out, because uh, there's a provision in the American Rescue Plan which says that if any federal assistance is provided to the state has to has to cannot use that money for any tax cuts. Now, there's some confusion in those things. There's no clarity. That's why the state have asked the Treasury Secretary to clarify those points, and they are waiting for them. Till that time, nothing can be done for each state. So we have to wait for filing the tax returns for S corporations, LLCs, C corporation who have got the PPP loan, applied for forgiveness, and they are California based. But we cannot file them because we are waiting for the California to come back and say whether they allow the expenses that are used for PPP loan forgiveness as deduction on their California returns. We know that they did arrive at an agreement in the month of February, and where they said they are going to allow up to $150,000. But now they have stopped it. They have not said anything more. because of this provision, of this confusion, I will say. So those are the few changes, Deepak, that happened from last time till this time. Like
Yeah.
I said, every day is a new day. So let's see what happens.
So Sanjeev, you obviously answered the question about unemployment. You talked a lot about recovery plan. What about the corporations, S corps and C corps? Should they wait a little bit more to file their tax return still, or?
Yeah, like I said, they have to, if they are in California, they should wait. If they are in other states, and find out from the state whether they allow the, sorry, expenses used for forgiveness. There are some states which allow, some states don't. So you have to look at your state and find out whether they allow. And if they allow the forgiven expenses, go ahead and apply and file the return. But it's a time to, for others, like in California, we are waiting. So we are waiting for that one.
So those of you guys who are watching this video of Sanjeev ji for the first time or not familiar with our firm, we are located in California, but we do serve clients from all over the world. So Sanjeev ji do have clients from operating out of India, or for that matter Canada, or even other countries, and they reach out to him directly, and he can obviously do consultation via Zoom meetings or over the phone and take care of your bookkeeping and taxes and so forth. Now, for most of us, what's important right now is next week, this next Saturday, we have a webinar coming up on FBAR, foreign income and asset disclosures. So that is coming up. Sanjeev will talk deeply about what you need to report and what you shouldn't report, which is important for you to know, because once you report, then it sort of becomes part of history, and you need to make sure you stay on top of it. So it's important, if you have retirement accounts, if you have money in bank accounts, you have some business in India, or you have some life insurances, or maybe you sent money to buy a property, or you sold a property, maybe you gifted some money to a brother, sister, uncle, or you received a gift from somebody. So all of those questions. So every time we do a webinar, we get a lot of these questions regarding India. So hopefully this webinar will answer all of those questions. So I would strongly suggest, once again, as always, our webinars are absolutely free. You don't have to be our clients to join them. We welcome anyone. Anyone is just register on our website. Go to sanjeevcpa.com, register there, and we'll send you a Zoom link to join the webinar. You can join it from anywhere in the world, and we'll be happy to share our information with you. And at the end of the webinar, Sanjeev ji is always available to answer all of your questions. So he typically sticks around for at least half an hour or so to take your questions, so you can ask them. And
Yeah,
then
Deepak. Yeah, Deepak. Yeah, I just want to add one more thing. People have definitely have a lot of question on the sale of property and everything, and how to bring money from there. Definitely, that's the topic we are going to cover in detail, uh, and also how to become compliant on this for prior year reporting using the STOP program. So yeah, this will be March 27th, which is coming up shortly this Saturday.
Once again, Sanjeev ji brought up another terminology here. What he was talking about is that if you have not filed FBAR for last few
Yes,
years, in
right.
those cases, you do need to file those, and there is a special program that you can participate in, and we will talk more about that program as well on the webinar. So, in addition to that, I just want everybody to also know that our offices are open. So, if somebody do need to file their tax return or needs an appointment with Sanjeev ji, you can definitely do that. As always, call the office number 510-825-7563, and we can take care of that right away for you.
Yes, and just to let all the everyone know about it that um, in California, particularly, we are in different tiers. So we have four offices, three offices basically: Fremont, Sunnyvale, and Pleasanton. And so Alameda County is going into orange tier, and shortly it will be yellow tier, hopefully. So definitely we are accepting new clients as they come in, walk in, maybe next month onwards, as we have the time till May 17th. And in Santa Clara County, the Sunnyvale office is in Santa Clara County. It's now in orange tier, going to be on March 24th. So we will accepting new clients as they want to walk in. Of course, we have to exercise caution, and the mask needs to be and mask needs to be wear, and also safe social distancing We all practice everything in our offices. Yes.
So there you go, friends. Those are all the updates so far for this month. But as you know, government is keeping us on our foot, and I'm sure there will be a lot more updates coming up in next couple of weeks. I think by the time we all end up filing our tax returns, there will be few other important changes. So we will continue to chat with Sanjeev ji, and hopefully he will bring us all those updates. So thank you so much, Sanjeev ji, for your time. Really appreciate it.
Thank you.